In this video, I'm going to react to short-selling Citron Research with their note about Palantir. I'm going to talk about the tweet that sent the stock lower on Black Friday, explain what it means for PLTR going forward, and discuss whether or not Citron is committing securities fraud with its actions. Shares of PLTR are up more than 200% since its September debut because of investor optimism in Palantir's data analysis tools for government and commercial customers. Naturally, such a meteoric rise attracts the attention of short sellers, that is, if they are not already on the scene. Now we have the infamous Citron coming along for the ride. Citron Research on Friday fired off a tweet. Here's the full message. What a run the past month for all. But as traders looking for short exposure, PLTR is no longer a stock but a full casino. Does not take a ball of crystal to know that this will fall back to ARDA. Shorting with a $20 2020 target. For anyone wondering, ARDA is the name of the Earth in The Lord of the Rings, the novel that is also where the company's name originates. So Citron is calling Palantir stock a full casino, thereby implying that everyone or almost all investors are making short-term bets or basically gambling on this company, and there is nothing to back it up at least above the $20 level. So Palantir shares reacted by reversing a strong open of $33.50 and started trading down as much as 20% for the day, before recovering somewhat to a close of only down 4.8%. Citron said it was initiating a short with a target price of $20 per share, well below the stock's $27.66 Friday closing price. For any shareholders, this is obviously not the best stock performance, as we've gotten used to double-digit daily gains. But let me just point out that the stock has not been this low since Wednesday. Seriously. This is just natural consolidation. The stock may very well have been down on the day, coming off of the all-time high $33.50 even without this note, though it is a little more unlikely. To be quite honest, however, Palantir the stock has been getting ahead of Palantir the company. The recent run-up in share price has a market cap of over $50 billion, 50 times the company's expected 2020 revenue. But that does not mean the company is not a good long-term buy. I and other bulls will argue that Palantir's unique technology and unique platforms will help attract commercial customers and allow for greater revenue potential, which could justify much more than the stock price today. Some sort of pullback should come as no surprise. I was certainly calling for it. And please, do not expect your stock to go up every day. A slight downward correction is just fine. I don't think we'll get down to $20, and if we do, it would be a great buying opportunity. But to all long-term shareholders, Citron wanting to get in on the action of this company does not change the long story nor the company's core business. Hence, I'm not bothered by it. Let's analyze what Citron is aiming for and why they are likely to be unsuccessful with this call. Short sellers that have focused on fundamental valuation analysis have been getting killed for years now, especially when it comes to betting against EV stocks and other hype stocks among that. The fact that Left specifically mentioned his $20 price target for Palantir is for 2020 suggests it may be simply a short-term bet on a correction rather than any long-term commentary on the stock. We know that Citron is shorting Palantir with that hypothetical $20 price target by the end of the year, which means they are forecasting more than 30% downside from current levels. Yes, Palantir was at $20 just a few days ago, but it would be naive to assume that the stock will drop back as quickly as it rose up. There is a reason for the skyrocketing share price. Increasing interest in the long term of the company and corresponding macro conditions that make this stock favorable in the short term as well. Currently, the company has 2 buy ratings and 3 hold ratings from analysts. No sell ratings, which is indicative of how Citron may be on the wrong side of the story here. In my video yesterday, I outlined Palantir's relationship with politics and how the stock is bound to continue to be one of the most controversial on the public markets because of partisan views, since criticism of PLTR's government work could limit interest in the stock. I mentioned 5 worst-case situations for Palantir: a recession and fallout with the government, too much controversy, getting caught up in politics, and corporate governance could put Palantir in potential future danger. I personally don't see any one of those causing damage to the long-term thesis of Palantir, but there's something that each and every investor must consider, especially when a short seller makes such a bold and public claim against a stock. Back to Citron Research, headed by founder Andrew Left. I found an interesting article claiming how Citron uses its platform to commit potential securities fraud. The article says by appearing on TV, or in this case just by sending out a tweet, he can cause quick declines in the stock price, potentially exiting some or all of his positions at better than original prices. Left has been involved in the securities markets for 2 decades and was fined twice early in his career accordingly. He was wrong about Tesla, NIO, Facebook, Shopify, and more over the long term. Sure, he can move a stock a few percentage points, but his predictions have failed to materially pan out. Just ask Elon Musk about Tesla being the 9th most valuable company in the world. I don't want to claim that Andrew Left is, in fact, committing security fraud with his actions, but it is possible he is using his tweets as a way to move the market and get a better entry or exit price for himself while confusing and taking advantage of new-to-the-market investors. Just listen to how he talks about Tesla, a company he was previously short on, in this clip.
And as a short seller, the most important thing you have to do is check your thesis all the time and see when things change. And when they started with Model 3 and the launch and the production and the numbers and how they were eating from the top and the bottom, and I realized it wasn't an EV revolution in this country. It was a Tesla revolution, that people want to own the Teslas. And if Steve Wozniak doesn't like his Tesla, that's fine. There's plenty of people who want them. And they're really turning things upside down. The way it's being sold, doing away with the dealer networks. And then you start saying, how can they make these margins on the cars? And you see, go ahead, it's not me. There's a consulting company that break down, they do a teardown of the Model 3 and show it. And then you take it to the numbers and say, you know what? Even if you don't want to buy it, when the stock was $265,
when and if this company ever makes money, why isn't the stock going down to $42 and it will join its compatriots at a 14 or 15 PE? Why is this stock not going to go south?
Because the old way of selling cars and how you look at cars.
Oh, it's different this time.
It is different this time.
Oh, yeah, sure. This stock is going south.
Well,
How
about this? I could tell you right now something. The dealer network is a ridiculous concept. All right? I would never let my wife or my daughter, let me finish, go ahead and buy a car. You look at the way Tesla sells the cars, not only are they generating more margin, they're actually making it better. If you look at the non-union aspect of it all, the less outsourcing of parts, they can start making money. The other companies, unfortunately, can't just change their whole business models. When you want to start an EV company, you just can't be half pregnant. You're there or you're not there. But what you're saying right there are all the reasons why I was short the stock. Right. But when I strip that down and you look at the numbers, how many they're selling, it's a simple thing. Forget about all the noise. How many they're selling, what's the demand for it? But when we're looking at the whole universe of stocks that are trading at crazy multiples, and we're going to pick on the one that's probably one of the most disruptive companies, that's a bit ridiculous.
You brought it up.
He took a complete 180 from his initial short call, from saying that, quote, supply and demand problems should take this stock down to $100 by year's end. It makes me wonder if, perhaps, Left will come around on Palantir and become a proponent for the company in the future. I'm not saying it'll happen, but it's something to think about. I understand how many of you are hurt from this, but if you are a long time horizon investor, I think you have little to worry about. The stock should be headed much higher in the coming months. As a subscriber pointed out to me on Twitter, ARK Invest took this opportunity to buy more into Palantir stock. ARK is not afraid of red days. Instead, they often take advantage of them and make good money that way. So drop a like if my thoughts and analysis were helpful to you, and subscribe if you haven't already. Until next time, peace.